Good morning, friends. Today is the concluding day of 2020, a very unhappy year due to COVID-19. Regular studies have been hampered to the greatest possible extent. Online, some virtual classes, online classes, these are the practice of this year. These haven't been the practice of this year. We don't know how long it will be carried on. Still, I am with you in my Insta and Facebook, and obviously this is my last class on in my Insta today, right, for this year. So let me wish a very happy and prosperous new year and very tension-less new year 2021. Let me start continue our studies. The topic the topic is going on cost sheet, manufacturing account, cost sheet and manufacturing account, okay, and along with final accounts. So friends, in my 20th class I told you gave you the meaning of cost, classification of cost, and after that I took up in my 21st class I gave you some information, some particulars in this board, and on the basis of that particular we prepared cost sheet, okay, cost sheet. And day before yesterday yesterday I completed this part, manufacturing account. Clear? So friends, while completing this part, there is some mathematical, arithmetical error I have made. And what is that? First of all, you know, just the manufacturing account or cost sheet, what we have to find out? We have to find out the direct material, that is raw material consumed. That has been done. Raw material, opening stock, add purchase, less return, add other expenses, less closing stock of raw material. That is raw material consumed, and that was done in cost sheet, and it was also done in manufacturing account. Okay. Now, since the space is very small, comparatively small in comparison to the volume of the topic. Okay. So that is why I have wrapped some part, and from two direct material, that is raw material, we have added, we debited direct labor and also direct expenses, and thereby we got prime cost. So prime cost we got, and this prime cost we should add production overhead here, production overhead, fire, rent, electricity, lighting, heating, salaries to work staff, salaries to works manager, wages to Darwan, repairs to plant and machinery, depreciation on furniture, depreciation on factory building, depreciation on plant and machinery. We got 81,000. That was the total production cost. Okay, the total production cost. Here, so this is herein I committed wrong, the arithmetical wrong. It was 236,000. So it is 236,000. It should be 236,000. Okay. Now this prime cost. This is the production cost. Production cost has got two elements. One is prime cost and the other one is production overhead. Now that amount, this production cost has been carried down over here. Okay, has been brought down. It has been carried down over here, and now it has been brought down in the debit side of the manufacturing account. Okay, and it should be 2,36,000. So it should be 2,51,000. 2,51,000. So opening to production cost, we have added opening work in progress, and we have deducted closing work in progress, and thereby we have got this one. And now it was 21,000 as per the information given, and it should be, so the amount should be it is 2,51,000. So the amount should be 2,30,000. So friend, and this is the production cost of the good finished. That is the production cost of the good finished. Now, up till this we have done. There are some mistakes, numerical mistakes are there, and that has been corrected. Now take up. Now proceed with the information given. And this part in today's session we will complete the cost sheet. What I have told you, I have already told you the production cost, that is production cost of the good finished, it is 2,30,000. Okay. Now you know it has already been told and it has been repeatedly shown over here that to production overhead we should add administrative overhead, and thereby we will get the cost of production, the total cost of production, and to that total cost of production we should add opening finished goods, and we should less closing finished goods, and thereby we will get the cost of production of the goods sold. And to that amount we should add selling overhead, and we should add distribution overhead, and thereby we will get the cost of sales. Clear? Now today my task is with the information I am completing this part. Okay, with the help of the numerical information given in that board. So friends, now see the particulars given. Here I am classifying what type of expenditure, which expense should go where. It is written at the top, particulars of expenses, continuation of the previous information, continuation of what we may call continuation to and continuation of the previous information. So what information has already been given in the last 2 days, we work with these are the additional information. Now salaries of two office staff. Salaries to office staff, it is the expenses incurred for the purpose of administration. Okay, so it is an administrative expenses, or it will come under the head administrative overhead. Administrative overhead. In short, I am writing ADMN, administrative OD, administrative overhead. Please take care. ADMN and short form administration overhead. So it is salaries to staff 20,000. It will come over here. I am writing salaries to staff. It is 25,000. Then come office rent. Obviously, you know the office rent. Office is an administrative organ. Office rent, office electricity, stationery and printing. All these are the administrative overhead. So this would be considered under these heads: office rent, office electricity and printing and stationery and printing. I am writing here from friend. Okay, so office rent 5,000. Then office electricity 6,000. And stationery printing 4,000. Clear? So these are the different expenses. Now see what is the other information. Now furniture is 50,000. Furniture is your what? Is your asset. So it should not come over here. Okay? It is a statement of cost. It is not the statement of an asset. The building how much? 5 lakhs. So that should not be taken into consideration. But now see one thing, depreciation on furniture and building. Furniture 10% and building 4%. Now these are to be considered because these are the loss of assets which are used in the administrative organ. Okay. So the depreciation on office building, depreciation on office furniture should be treated as an administrative overhead. Okay. So I am writing over here depreciation on furniture at the rate of 12%. Okay. So what is the value of furniture? The value of furniture is 50,000. So furniture is valuing the furniture which is being used, which is being used in the organization, administrative organ, 50,000. Now 50,000, 20% of 12,000 or 50%, that is 6,000.
10%.
It is sorry, 10%. So depreciation we have written over here. The depreciation on furniture 10%, and so it should be how much? It should be 5,000. Okay. Here. So depreciation on furniture. Similarly, the depreciation on building, office building, how much? It is depreciation on building. I am writing here at 4%. Okay. So now the value of the building is how much? 50,000, 5 lakhs. So 4% of 5 lakhs is 20,000. Okay. So 20,000 is the depreciation of the office building. Now see what is the other information given here. So salaries to office sales staff. So it is sales or selling overhead. It is not to be considered over here. Salaries to sales manager. It is also to be considered in the under the head of selling overhead. Now storage. Storage is basically a part of distribution. Okay, people say it is for sales. You may consider under the head sales, or you may consider under the head distribution overhead. Both are the obviously it is a single overhead, selling and distribution overhead. But for our discussion, for your understanding, I would like to make it separate. So storage should come under distribution overhead. Godown rent under distribution overhead. Transportation on sales. That is transportation on sales means the goods are being sold and it is to be carried at the place of consumption of the customer. Okay, so it is distribution expenses. Packing material, it is obviously distribution expenses. Furniture on selling center. Furniture at selling center. How much? 50,000. So it is an asset and it should not come under cost of sale. Okay, but something is written in between. Depreciation 12%. What does it mean? The selling center, the furniture which are being used at the selling center has been depreciated at 12%. Okay, so it will be 6,000 that will be lost and that will be taken into account. Now finished goods in stock, that is stock of finished goods, opening stock 18,000 and closing stock will be 20,000. Okay, and it is 20,000 and it is to be considered a bit later on. Let me see that out of the information given, what are to be taken for the purpose of completing this part. That is what are out of this information, what should come under the administrative overhead? Their salaries to staff 20,000, general manager salary 25,000, office rent 5,000, electricity 6,000, stationery and printing 4,000, depreciation on furniture 10%, furniture value 50,000, 5%, 10% is 5,000, and depreciation on building, general building, that is administrative building, it is depreciation 4%, the building value is 55 lakhs. So it is depreciation at the rate of 4% is 20,000. Now what is the total amount? What is the total amount? It is one thing I just letting you know that we should better consider these write these items over here, okay? Because this part should be kept aside, just to add any outstanding, any advance or further. Okay, so I am writing this. Okay, 20,000 25,000, 5,000, 6,000, 4,000, 10,000, and 20,000. So, because this part we consider, this part is used basically for just any outstanding, say salaries to staff. Say consider this part. Okay? Salaries to staff, say paid 18,000. Now 2,000 outstanding. So they are in that case we would write 18,000 and 2,000. It will be 20,000. Okay. So for addition, alternation, for addition, subtraction, this part is being used. 85. No? Okay. So friend, it is 85,000. It means it is total 3 lakh 15,000. Okay. Clear? So thus we have got what? Cost of production. Cost of production. Cost of production 2. Clear? So we have got the total cost of production. The cost of production as per the information supplied, it is 3,15,000. Clear? Now you see what is our objective. Our objective is to find out the cost of sales. Clear? Our objective is to find out the cost of sales. The goods, those have been produced, those have been finished, but have not been sold. No selling and distribution overhead should be added to that. Okay, so that is why, and we have to find out the cost of production of the goods sold. It is the total cost of production that have been incurred this year by the organization. Okay, but our objective is to find out the cost of sales. That is, in order to find out the cost of sales, we have to first find out the cost of production of the goods sold. So now, what is that amount? So up till this, in meeting the expenditure of this volume, we have affected, or we have considered all the items, and all the items have helped us to meet the expenses amounting to 3,15,000. Clear? But some goods remain unsold for this year. Okay, unsold for this year. So 20,000. This closing stock should be deducted. Okay, the closing stock should be deducted. But again, there was some finished goods at the end of the year. It is 18,000, and that should be added. Okay, and you know it better because why? By finding out this part, no, the production cost. What we did. We have found out the total factory cost or production cost or work cost, and to that we have added opening work in progress, and we have deducted closing work in progress. And by just writing it in the debit side, it is addition, and writing in the credit side is the subtraction, and the neat amount is the production cost of the good finished. Here our objective is to find out the cost of production of the good finished. So what is the difference between production cost and cost of production? Production cost, which one is bigger? Cost of production is bigger. Production cost is smaller to that. Okay, production cost has got two constituents. One is prime cost, and the other one is production overhead. And but cost of production has got 3 dimensions. Cost of production, just you see production cost. Okay. Production cost has got prime cost plus factory or production overhead. Okay, and cost of production (CP). I am writing cost of production has got production cost plus administrative overhead, and production cost has got what? Prime cost. Sorry, production. It is prime cost plus factory overhead. So cost of production has got 3 ingredients. One is prime cost, number 2 is production overhead, number 3 is administrative overhead. while production cost has got two ingredients, two parts. One is prime cost and factory overhead. And while prime cost has got three parts, by direct material, direct labor, direct expenses. Okay. Now see, this is the total. Now we are adding opening finished goods. Opening finished goods. How much it is? It is 18,000. So it is 3,333. Okay, 3,33,000. And closing finished goods, less closing finished goods, less closing FG. I am writing here. Yes, closing finished goods. It is 20,000. So it is 3,13,000. That is the cost of production. Cost of production of the goods sold. Of the goods sold. Okay. So friends, thus we have got the cost of production of the goods sold. Clear? Achha. Now see, we have got prime cost, but before prime cost we have got the raw material consumed. That thing has been done over here in the sheet, and also that thing we did, we tried to show it in the manufacturing account. Then here we calculated the total prime cost, direct raw material consumed, that is direct material, direct labor and direct expenses. And thus we got the prime cost. Here we also prime cost, and that is the extended part, and then prime cost has been brought down. To prime cost we have added factory overhead, and we have got the total production cost or overall cost or factory cost, and from that we have added, to that we have added opening work in progress and closing work in progress have been deducted, and therefore you have got the prime cost of the goods finished. It is as per the manufacturing account. Okay. And as per cost sheet, we have shown all these things. Now this part, how do you show? How do you show in the account? And this administrative overhead is not a part of manufacturing overhead. So this part is to be considered for the purpose of preparation of profit and loss account. Clear? So friends, right now I am changing the title over here. It should be profit and loss account. And loss account. Okay. So administrative part is considered for the purpose of preparation of profit and loss account. Okay. Now, so I am running this part. Okay. I am starting with this. Okay. I will try to give you some additional important aspects which are basically done in real life. So it is 2,30,000. Now see, while you are preparing profit and loss account, you might have seen here you have the gross profit. Okay, how did you get the gross profit? Just try to recollect. Those who are the regular reader, regular practitioner, those who have practiced along, they can easily understand that here we consider the gross profit which we have found from trading account should be brought down over here. Okay, can be brought down. And how do we get how we get gross profit? Gross profit is the purchase, opening stock, purchase less return, all purchase related expenses here, and we have sales and closing stock. The difference with gross profit. So here, in case of memory, if you want to develop your profit and loss account from manufacturing account, then we have got this one. Okay, the production cost of the goods finished. PC, PC or WC or production work cost or factory cost. FC of the goods finished. Goods finished. Here. 2,30,000. Here. Very often I am telling you that this part, each and every organization, manufacturing organization, add some amount of profit to the factory cost. Okay, they are not at all interested to allow their administrative organ to know how much profit, what is the real cost. They basically try to enhance the cost, and that is why we add to that manufacturing profit. A percentage is already added to that. Say our organization is adding this 20,000 manufacturing. Clear? So it is 2,30,000. Clear? And this is treated as the 2,50,000. So 2,50,000 is the cost of the goods that have been produced or purchased. Okay, and that is transferred to trading account. Okay, trading account transfer. How much? 2,50,000. So in profit and loss account, what we do? So then we put it in the trading account. Clear? To trading account. To trading account, just by showing that, we show the profit, the cost of the goods is 2,50,000. Clear? But for our on the basis of this information, we are preparing the account. So I am not adding all these things. I am just showing the factory cost of the goods sold. What is the amount? I am making this as in parity to our cost sheet. The cost of goods sold is 2,50,000. Clear? Now we have to add all the administrative overhead. Any problem? I think no. But the two administrative expenses, two administrative expenses or overhead. What is the, I am not writing in detail, okay? Because all this has been done, just I am making the total. What is the total? It is 85,000. Clear? So it is 3,15,000. Okay. Now, this is the production cost or works cost or factory cost total. CD. Now, it is production cost, works cost or factory cost total. 2,50,000.
2 lakh.
There 50,000. Now to this we should add opening finished goods. How much? Opening finished goods 30,000. Okay. And closing finished goods by closing finished goods. How much it is? 20,000. Clear? The difference is production cost or works cost or factory cost of the goods sold. It is how much? 3,33,000. It is 3,33,000. That is the cost of production of the goods sold. Clear? Understood? But this is the real practice. This is the real practice. It should be. But if so far as academics are concerned, if you follow the books, basically this part is considered while preparing trading account, opening stock and closing stock of finished goods. So since we are only doing manufacturing account, I am making it in that way. Okay, but this part in a comprehensive case, the trading account will be a very comprehensive area, and all this will be considered. This part will be considered in trading account. Clear? And now we have got the cost of production of the goods sold. Okay, and it is 2 lakh. No, sorry, friend. It should be what? It is the cost of production. This was cost of production. It is cost of production, total cost of production, okay? You should say. And it is the cost of production of the goods sold. Understood? So this is the balancing figure. 13,000. That is the cost of production of goods sold. Clear? And initially there was a mistake was done. I wrote it is cost factory cost or production cost, or that should not be. It is that part has gone. That part has been loved. Okay. And this is the cost of production, total cost of production. How we have got it? With the production cost of the goods sold, goods finished. To the production cost of the goods finished, we have added administrative overhead. Thereby we have got the cost of production, total cost of production, and that has been shown over here. Okay? Clear? And now this part is added over here, and that part is deducted over here, and thereby you have got the stock cost of production of the goods sold. Clear? Now again I have to rub it. Okay. part I have not. Here 13,000, no? Cost of production of the goods sold. Now we should add what? Selling overhead. Okay. What are selling overheads? Then you see that all these have been considered. These have been considered. That is considered. That is considered. All these have been considered. Now salaries to sales staff, okay? These are selling expenses, okay? Salaries to staff. How much? It is 12,000. Salaries to sales manager. Salaries to SN, sales manager. 18,000. What are the storage? Storage, go down rate, basically all storage may come under the purview of selling expenses or also in the distribution expenses. I think it is better because it is a case of storage. It is done in for the purpose of distribution. Okay, sale is made somewhere else and distribution is done in some other places. So you can consider anywhere. Here you can consider and you can consider over there also. Here for our purpose you may consider storage. Storage how much? 7,000. Okay. Transport go down rate. Go down rate should go over here, or it may go under distribution overhead too. This is amount around 6,000. So it is 43,000. Clear? So we are getting 43,000 over selling overhead. Then we add distribution overhead. Distribution overhead, transportation on sales. It's the distribution overhead, transportation. Transportation, how much it is? 5,000. Packing material, of course, is the distribution expenses to make a safe delivery of the goods to that customer. Packing materials are 3,000. Okay. So it is 8,000. No, sorry, some of the things are there. So one thing is that furniture at sales center. Sales center, it is how much? It is 50,000. So selling center has got a furniture of 50,000 and it has a depreciation of 12%. So 6,000 is a loss. It should be added to that. Depreciation on furniture. Furniture how much? 12%, 6,000. So it is 49,000 and it is 8,000. It is 57,000. Thereby we get what? It is the cost of sales. Cost of sales is how much? 7,000. See that? So 3,70,000 is our cost of sales. Now, this may be considered. This should be considered over here to selling overhead, to distribution overhead. Selling overhead, how much I am writing in gross? 47,000, 49,000. It is 49,000. And distribution expenses 8,000. It is 57,000. So the total is 3,70,000. It is by cost of sales. It is a balancing figure. Balancing figure. Balancing figure is because these two have been added, and by adding this, we are, in order to make the both sides equal, we are getting this value. 3,70,000. That is the cost of sales of the organization. Okay. Now to this you can expect add profit element. Okay. Profit. The company has a practice of earning a profit of 25% cost of on the goods sold. Okay. Profit and cost, it is 25%. So 1 crore should be added. How much 1 crore? It is how much it is? Calculate it. Okay. It is 7.4. Okay. Is it? Huh? 92,500. So we add 92,000. 92,500. So it is 100, 2, 6, 4. So 4,22,000. That is total. Okay. That is the expected sales price. Clear? So this is the sales price. Thus, this way, it is basically a forecasted cost sheet. Okay. So friend, this is as per the information given for cost sheet. Now, if for finding out for preparation of profit or loss account, we will put it over here, and exact sales price will be written over here, and thereby we will get the net profit of the corporation. Clear? So that's a very rigorous area. So I started in, this is the third class, I have taken 3 classes I think to complete this part, okay. Costing in full, manufacturing also, along with the provision to be, issues to be taken into account when preparing the profit and loss account. Now I am giving it in a nutshell, the total thing what I have done. I will take only 5 to 10 minutes to complete all this. Clear? So friends, the cost sheet I told you. Cost sheet is a sheet as the name, as the term suggests. The sheet refers to the statement. Okay, it is a statement of cost. Cost sheet is a statement of cost. So what is cost? The cost, regarding cost, I have told you. Cost, if you want to get something, you have to give up something. What you get and what you give. What you give, that is the sacrifice for getting that. Okay, and that sacrifice should be regarded as a cost to you. And this sacrifice may be financial, maybe non-financial. If it is non-financial, friend, we must not consider for the purpose of our discussion. If it is financial, we must take into account, and that is our sacrifice in terms of money. So, in order to get something, we have to sacrifice something, and what I have sacrificed, which is reserved in terms of money, that should be a cost. So, cost is nothing but the money third expenditure incurred for given purpose. Right? Whatever it will be. Now, this is cost. So far as this is in general, but whenever when you are considering these costs in the context of an organization or a manufacturing organization, essentially the cost refers to all the money expenditure incurred for getting the goods produced, okay, for production of goods and services. That is the total cost, and that cost has got a huge dimension, huge implication. So far as their treatment is concerned, the costs are divided. Some costs can be directly treated, and some costs are cannot be directly treated because of their differentness, because of their different implication. So the costs which are identifiable, which can be directly treated in particular the unit of production, that is known as direct cost or identifiable costs, and those which cannot be directly treated, those who are temporary in nature and that cannot be found out per unit directly very easily, and that is known as indirect cost or non-identifiable costs. Whatever it may be, costs has got 3 elements. One is the material cost, and the other one is conversion cost, that is labor, and the third one is expenses, the related expenses. Okay, so cost has got 3 elements: material, labor, and expenses. It has got 2 dimensions. One is direct cost and the other one is indirect costs. Direct costs are of 3 types: direct material, direct labor. Direct expenses constitute totally prime cost, and indirect expenses, indirect labor, and indirect material, indirect labor, and indirect expenses constitute indirect expenses total, and that is known as overhead. These overhead are classified as per the functional area of the organization. One production function, production overhead; for administration, for the office administration organization, and that is known as administrative overhead. Regarding sales and distribution, they are known as sales overhead and distribution overhead. And taking or considering all these things, we prepare a statement, and that statement is known as cost sheet. Clear? The cost sheet, how would I prepare the cost sheet? For preparing the cost sheet, we should first take up the direct material part, because it is the direct material on which other works are done. So direct materials are already named raw material consumed. How do you get the raw material consumed? Raw material is the amount and material which is used for the purpose of conversion of goods from one form to the other. That is the basic material. That is the basic that should be the basic material issues that are wherefrom we have to start. So for starting our preparation of cost sheet, we have to take raw material first. And raw material consume means the total purchase of raw material. Now, out of that purchase, some may be returned. Okay, that should be deducted. Some may be remain in stock, that should be deducted. There might have been some opening stock, that should be added, and all the expenses relating to the purchase of raw material should be added to that. And that is bookage and purchase of raw material, commission on purchase of raw material, carriage on raw material purchase. So all these constitute the total cost of raw material. So raw material total purchase cost of purchase, cost of and the expenses related to purchase, opening stock add, less closing stock. We get the raw material consumed. Then to that we should add production overhead. Production wages. Okay, manufacturing wages is a bigger amount, direct in nature, and And there is another element that is direct expenses, and its royalty and production is basically regarded as the direct expenses. We get prime cost. This prime cost we should add what? We should add production overhead or works overhead or factory overhead. The factory overhead are the expenses, indirect expenses which are incurred in the factory. All the expenses, the factory electricity, factory lighting, factory rent, fire and lighting and heating, and depreciation on factory assets, and many other things are over there. So there are many other units, items are there that constitute the total factory expenses, and it should be added to prime cost. The prime cost plus factory overhead, we get total production cost. Clear? But our objective is to find out the cost of sales, that is cost of goods finished and sold. So we have to, from there we have to deduct the closing work in progress on which the works have been done but that have not been completed. That is known as unfinished semi-finished goods or unfinished goods. That should be deducted, closing one and opening one should be added. We get the prime production cost or work cost or the factory cost of the goods finished. Clear? To that we should add administrative overhead, which I have taken up today. Yesterday I took up and today I have completed. Well, administrative overhead over all the indirect expenses which are incurred in the office for general administration of the organization and under the purview from office rent, office electricity, office lighting, stationery, printing, depreciation on office building, and salary of the general manager or office manager or whatever other. That should constitute the administrative overhead. That should be added. And by adding to that, we get the cost of production, total cost of production. But our objective is to find out the cost of the goods sold. But some goods are finished but not sold. So there's already the works have already been completed but they have not been sold. That is known as stock of finished goods. That should be deducted. The closing one should be deducted and the opening one should be added. And thereby we get the cost of production of the goods sold. And that cost of production goods sold, we should add selling overhead and we should add distribution overhead. And thereby we will get the cost of sold, cost of sales. Okay? And that is the actual cost of the goods sold. Clear? And to that we should add some expected profit and thereby we get the sales price. Clear? So that is everything, friend, with regards to cost classification, cost of sales. And along with that, I have also prepared manufacturing account. The way we have prepared trading account, in that way we have also prepared manufacturing account, and you might have gone through over there. So that is all about my cost related area. Yeah, in the inaugural, tomorrow is our. So it's a great day for everyone. Have a happy New Year. Everybody enjoy the day beautifully. And make a resolution what you want to do in the days coming. Be there any pandemic or no pandemic, study properly. Be it offline, be it online. Okay? And friend, on that day I will take up the subdivision of journal. Okay? Subdivision of journal, and thereby what would be my my next plans regarding presentation. Number one, subdivision of journal, then cash book. Okay, and after preparation of the cash book, I will take up the trading final account of non-trading concern. Clear? So thank you very much. Have a very nice day today. The closing day. Enjoy the day in full, and start a beautiful year 2020. Okay, thank you very much.